Tesla stock is trending as of Thursday, 29th, 2026, after reporting Q4 earnings that cleared lowered Wall Street expectations, sparking an intense split in investor sentiment. While revenue and profits declined year over year, the market reaction skewed cautiously positive as management leaned hard into a long term AI, autonomy, and robotics narrative that bulls see as transformational and bears see as capital intensive and risky. On the numbers, Tesla delivered a mixed but not disastrous quarter. Revenue came in slightly ahead of expectations, even as earnings fell roughly 17% year over year. Importantly, margins showed real improvement. Total gross margin rose to 20.1%, the highest level in 2 years, signaling some success in cost controls and product mix despite a 16% drop in vehicle deliveries. Auto gross margin, excluding regulatory credits, climbed to 17.9%, helped by regional mix and pricing discipline, easing fears of an outright margin collapse in the core auto business. The standout was the energy segment, which continues to quietly become a major pillar of Tesla's business. Energy revenue reached $12.8 billion, dollars, up 26.6% year over year, driven by record storage deployments and strong gross profit contribution. However, management cautioned that margins could compress going forward due to tariffs, policy uncertainty, and intensifying competition, tempering some of the enthusiasm. Where the earnings call truly lit a fire was on strategy and capital allocation. CFO Vaibhav Taneja revealed Tesla plans roughly $20 billion in CapEx in 2026, more than double 2025 levels, and about $10 billion above Wall Street expectations. This massive step up reframes 2026 as an investment heavy year focused on scaling autonomy, robotics, AI infrastructure, and manufacturing capacity across 6 factories. The scale of spending immediately became a focal point for debate around execution risk, funding, and near term free cash flow pressure. Tesla also announced a dramatic shift in its manufacturing footprint. Model S and Model X production will wind down next quarter, with Fremont being repurposed into an Optimus humanoid robot factory targeting 1 million units per year. Management reiterated plans to unveil Optimus V3 in Q1 2026, begin production before year end, and eventually scale robots at a pace comparable to consumer electronics. Bulls see this as the moment Tesla fully transitions from car company to AI manufacturing platform. Bears argue this is an unproven market absorbing enormous capital, while the core auto business weakens. Autonomy remained front and center. Tesla plans to expand robotaxi services to 7 U.S. markets, push Cybercab toward large scale production in the first half of 2026, and continue heavy investment in house AI chips, memory, and compute, what management repeatedly framed as the foundation of a future Tesla terafab. Tesla also disclosed plans to invest about $2 billion into XAI, further blurring the line between Tesla's automotive business and Musk's broader AI ecosystem. On software, full self driving paid users reached roughly $1.1 million, a milestone that reinforces Tesla's software leverage. However, the shift toward subscriptions is expected to pressure near term auto margins, adding another layer of earnings volatility, even as long term lifetime value potentially improves. During Q&A, analysts pressed management on how Tesla plans to fund its soaring capex, the risk of chip and memory constraints, battery bottlenecks with 4680 cells still a limiting factor, and the pace of Robotaxi and Optimus rollouts. Management remained extremely bullish, emphasizing vertical integration, AI differentiation, and long-term operating leverage, but offered limited detail on near-term returns. Overall, the quarter is being viewed as a strategic inflection point rather than a clean financial win. Bulls argue Tesla is deliberately sacrificing short term earnings to secure dominance in autonomy, robotics, energy storage, and AI, industries with trillion-dollar potential. Bears counter that the core auto business is deteriorating, valuation remains stretched, and the company is layering massive execution and financing risk onto an already volatile earnings profile. The result? A stock that beat lowered expectations, rallied modestly, and reignited the fundamental debate over whether Tesla is an undervalued AI platform in disguise or an overextended automaker betting the balance sheet on an uncertain future.
Okay, so the stock is currently trending as we indicated earlier on. Let's see what's going on. Up 2.51%. This is the pre-market session of Thursday, the 29th of January 2026. Okay, so not very much is going on. The pre-market session hasn't really opened. On its 4-hour chart, given this earnings outcomes, the extrapolation is that the strength it has right now, that it picked up from Tuesday, as a matter of fact, picked up from Tuesday, the 27th, is expected to remain in place up till Monday, the 2nd of February. And then from that day as well, or yeah, from that day as well, is expected to consolidate up till the next day. Then there's a chance that we might see a contraction from the third, from Tuesday the third. There's a chance we might see a contraction. Okay, projections are currently saying 438, just a slight upper projection, and then every other thing is a downward projection: 404.25, 411.27, 422.65. Let's see whether we have any intraday highs. It has printed. No, okay. 454 was printed a couple of days ago. Yeah, on the 20 Friday, the 23rd. That was when it printed this 454. So our market grid wouldn't give us any. Okay, let's just see anyway. Let's have a look at the 1 hour chart. See what the market grid is indicating. 452, between 452 and 419. It's currently trading at. It's just right now on. It's currently at 442 now. So 442 is 442. It has a decent amount of support at that those sort of levels. Is at 442 now. Just this is where it is. Okay, it has a decent amount of resistance rather. Yeah, they're all clustered there. 44, between 440 and 448. Yeah, so the chance of it retesting 452, might be an uphill, no, not might be an uphill task. Okay, let's see now. Let's have a look at the daily chart. Underlying trend strongly bullish. Let's see. This extrapolation has been overtaken by what's going on right now. Projections are not saying anything to the upside, but I know its weekly chart is indicating higher prices. Should be indicating higher prices the last time. Well, it's been some time we checked it, but they were quite ambitious then. Let's see what we have. Yeah, 536.24, 594.86, 631.08. It has been they've been reiterated for a long time. Yeah, 536.24, 594.86, 631.08. Yeah. Okay, so that's what's going on with Tesla. Let's just see. Let's see how it goes. Let's see how it all goes. Let's see how it all goes. Yeah. Okay, I'll definitely continue to update you. Thank you very much for watching this video.